I think most listeners will be familiar with Luxor, but just in case they're not, Luxor is a Bitcoin mining software and services company. They operate a mining pool. I personally have my machines, few that they are. I wish they were in the thousands. They are not. But I have my S19s, sending their hash power to the Luxor pool, and I get obviously I'm stacking sats through that method. And just generally well thought of company, doing it the right way, doing it and maybe a way that would seem methodical, but that's how you have to be in this industry. Hash rate is a commodity, machines are a commodity, and you can't just get out over your skis. And so Luxor's earned a lot of respect by being very methodical in their processes. Okay, so this derivatives product that you guys are developing is very important for the industry. Steve Kennard, the TBC's director of Bitcoin mining analytics, is quick to tell me and remind me that in the oil and gas industry, you don't get investment capital unless you're hedged. And in the Bitcoin mining industry, it should be the same way, right? We should see lenders start to require hedging as a precondition for investment. So do you expect that we are close to that? Have you heard rumblings of that? Is that why you guys started this product? Because eventually it's going to be a requirement, or maybe not a official requirement, but a de facto requirement?
Yeah. So, I mean, first of all, the way we view this, and just kind of take a step back, the way we look at this, I think you mentioned, is commodity. At Luxor, we see hash rate as a commodity. It is a new native digital commodity.
Yeah.
Bitcoin miners we see as producers of that commodity. And we believe at Luxor that they should have access to the same suite of financial products that allow them to de-risk and to optimize their operations that producers of other commodities have. And like you said, Lee, and like Steve from TBC has often pointed out, this is the standard in the oil and gas industry, in agriculture, in electricity. And so, we're not reinventing the wheel here, but we do have a new asset class. And we believe that just, basic first principles is we want to be the ones that build those financial products for miners specifically, so that they're able to employ hedging strategies. They're able to have some certainty into their business planning. And then hopefully that will help facilitate access to capital. We just, as we see this industry mature, the operations get larger and more sophisticated, the integration with the energy sector becomes greater. That's the direction we see this going, and that's why we really launched this product. Is we think this is a commodity producing business, and like any other commodity producing business, they should have access to the financial products that help them, make their operations more efficient.
Amazing. It's tough to launch a product like this in a market where people just wish they had been hedging, a year ago. And now some of them are in a position where they don't think they can afford to hedge. What would you say to that if that comes up in a conversation?
Yeah, well, obviously capital constraints are a big topic in the industry, and particularly right now. And you're absolutely right. Of course, looking in hindsight's always 2020. It would have been, better to hedge out, before the drawdown than after. But the reality is a lot of these products didn't exist before the big drop down. In particular, our product, which was only launched in beta phase in October and in standardized kind of non-beta phase in January 1st, so only 20 days ago. So, I don't think miners really had the opportunity to employ some of these strategies and to hedge the way that they would. I know that there's, for example, Bitcoin futures, which are a valuable hedging instrument. But of course, miners on the revenue side are exposed to more than just the price of Bitcoin, right? Miners are exposed to what we call Luxor hash price, which takes into account 4 variables, right? There's your Bitcoin price that you're exposed to, there's your network difficulty you're exposed to, and also transaction fees and the block subsidy. And so, when we looked out in the market, we saw that there was Bitcoin futures, but that's really not a product that's specific to miners that looks at the risk exposures they have on their at least revenue side. They have power purchase agreements that can hedge their cost side. The Bitcoin futures are great for hedging part of your revenue and definitely your balance sheet. But we wanted to launch a product that allowed miners to really lock in on the cash flow portion of their businesses. And so, we're, as a mining pool and as our content site we call Hash Rate Index, I should say, or plug it there as well. We really see hash rate as a commodity at Luxor. And we have an index where we value. It's called our hash price index. We take, if you have 1 petahash of hash rate, how much can you expect to earn in a 24-hour period? That's up live on our website. And as a mining pool, we're really the spot market for hash rate. And so that's the way that we view it. That's the way that we see it. And so, hopefully with this product now, hindsight's 2020, capital is constrained. Those are obvious concerns and totally get that. But our view is that looking to facilitate that access to capital in the future, like you said, hedging strategies, I think will be very important, and particularly with the you could say it's even carnage in the blockchain space. There's not a lot of capital. I think capital coming, going forward, at least for the next little bit, will have to come from outside the sector. One area that looks promising to me is the energy sector, particularly with the higher energy prices that we're seeing in the energy bull market. There's more capital in that space.
Yeah. And
we think that a hedging product like this, which is analogous to what people in that industry are used to seeing and being really a prerequisite for facilitating access to capital, I think that, a product like this that we have that allows you to de-risk your operations in such a volatile market will ultimately help bring capital in. But of course, it is tough times out there, and we want to build products so that in the next bull market, we can be in a better position and hopefully, kind of lessen the hurt that's out there in the next bear market.